And our own markets look like they're going to fly off the shelves this morning. 78 points higher now in the Nifty.
A steady morning so far, a good Tuesday. The Nifty is up 80 points.
Well, it's a good day, right, for the markets. The screen shows that all four indices, they are in the green right now.
Not a bad day at all. And considering the kind of wobbly start we had yesterday, this is looking good. It's been a slightly quieter day for mid-caps. It's just like that steady innings, right? You get the singles and by the end of it, you have a nice total on the board.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the headlines for this evening. Sensex gains nearly 300 points and the Nifty gains over 80 points despite a late sell-off. Mid-cap index at a record high even as it underperforms the blue chips. Titagarh Rail Systems jumps after it ties up with ABB for sourcing and technology transfer of metro propulsion systems. The company tells CNBC-TV18 this will make it more competitive and boost margins. IRCTC gains on a nod for inking long-term catering contracts even as its water unit starts production. Oberoi Realty climbs on the launch of its luxury project in Thane, while an order boosts Vascon Engineers. Tata Steel and KPIT Tech buzz and trade on brokerage outlooks. Oil prices ease, reversing yesterday's rally. Investors turn cautious over weaker demand amid a slowing global economy and the prospect of deepening supply cuts by OPEC. IREDA makes a stellar debut on the Lal Street, gets fully subscribed within few hours of its opening. 5 other companies are all set to launch its IPOs this week, plan to collectively raise 7,300 crore rupees. The next big IPO will be Tata Tech, which will open for subscription tomorrow. And here's the lineup of what we have in store for you. In Market Opinion, we have Sandeep Bhatia, Head of Equity at Macquarie Group. In Corporate Poises, we have Umesh Chaudhary, VC and Managing Director of Titagarh Rail Systems, and Pradeep Kumar Das, Chairman and Managing Director of IREDA. The first headline and the day's market action. Stocks ended off the day's high but still managed to stay in the green. The Nifty failed to hold the 19,800 mark, but the mid-cap index hit a record high in intraday trade even as it closed with minor gains. Surbhi Upadhyay is here with the market wrap. Surbhi?
It was a day of steady gains on the street. No big shots or big hits, but those small, simple sort of singles that keep adding to the total tally. And by the end of it, it was not a bad-looking screen at all. We had the level of 19,780 thereabouts on the Nifty, so approaching the 19,800 mark. Good day for large caps. If you look at the mid-cap index, you'd probably think that it was a very quiet or a sort of a not-so-great session for mid-caps, but that's not the case. I'll come to the individual movers and shakers in a bit. The consolidation is with a positive bias and there's a lot of sector rotation going on. That's the top trend from the market today and in fact the last couple of sessions as well. There aren't too many major cues or major global triggers or earnings that we're reacting to anymore. So it's basically sector rotation that's playing out. Today's sectoral winners then, insurance, auto stocks, real estate, and of course some metals. And I'll give you some examples to sort of cite this. Look at HDFC Life, SBI Life, or ICICI Pru, ICICI Lombard. All the insurance stocks were up anywhere between 1% to 3-4%, depending on which one you were looking at. Similarly, on the metal side, there was a big trade going on. Perhaps it's linked to the fact that the dollar index has cooled off in the last couple of sessions as well. Hindalco, Tata Steel, JSW Steel, all of these stocks were looking very strong and smart on the Nifty. Reliance added to the Bulls party today. It saw a move of about 1.5%, and that's on the back of a Morgan Stanley note, which cites that MS at least believes that Reliance is coming out of a long investment phase, and now is when the rewards of that investment will start showing up in earnings. So the market took note of that note as well. Coming back to mid-caps, the point I was making, don't go by the index. Look at the individual stock movers, and there were plenty of high flyers here. Oberoi Realty, for instance, put on another 4% today. You had a Kalyan Jewelers that was up about 4-5% thereabouts. Ashok Leyland, I mentioned autos were a good show today. Ashok Leyland, some strong volume and price action there on this one as well. Titagarh Rail, as they're getting into a joint venture for metro trains with ABB. And then there was Honasa Consumer, the parent company of Mama Earth, a massive 5% move on this one. So, plenty of action in the mid-cap and in the small-cap arena. Coming to tomorrow, the market will, of course, go over the FOMC minutes from the November 1st meeting. The indication is that we will see no rate hike in the December meeting. Yields have been on the back foot, and the market has really taken that with both hands, and traders will want that to continue when we come into trade tomorrow. Also, tomorrow is the day that we get in another IPO from the Tata stable after many, many years. Tata Tech will open out for subscriptions tomorrow, so it promises to be an action-packed day.
Surbhi, thank you so much for joining us with that analysis. So that's the market action for the day. But now on to some market opinion. Sandeep Bhatia, head of equity India and country head at Macquarie Group, said that the state elections will have a limited impact on the market. He also bets on the real estate sector. Take a look.
This market is fundamentally poised to be still in a range until we see clarity on where interest rates in the US are headed for the whole of next year. I think in two large states in central India, there could be a negative outcome for BJP. Whatever that may be, it will not mean that the whole market prognosis of 2024 final general elections can change. We've seen that state elections have limited impact. And to that extent, whatever happens in the state elections, and as I said, there could be two states where BJP could not be a clear winner or could even be on the losing side. One would not get so perturbed, and I think the markets will also be able to take it in their stride. I would bet on a 14% I think a 12 to 14% is what we will see. There's been clearly, pressure coming through in some parts of the economy. The rural markets are still very weak. I think real estate has been always asset class of a lot of interest to smaller retail investors in addition to financial assets. We've seen that in India for a long time. As far as real estate is concerned, for large commercial real estate or large buyers of real estate in India, I think yes, they will continue to be interested.
Okay, that is the market opinion coming in. Moving on to the second headline now. Titagarh Rail Systems and ABB India were buzzing in trade after both the companies formed a strategic partnership for the supply of propulsion systems for metro projects in India. Umesh Chaudhary, VC and MD of Titagarh Rail Systems, said that this tie-up will help facilitate the transfer of train building technology. Listen in.
Basically in line with our strategy to backward integrate our metro business or our passenger coach business with having our own propulsion and the TCMS. What is very significant in this is the TCMS, which is actually the brain and the nerve center of a train. And under this agreement, we will be having a complete transfer of technology of the TCMS, and we'll be setting up our complete facility in-house to be able to be self-reliant and Atmanirbhar on the TCMS part of it. Total investment that we are doing in the overall business, in the overall propulsion business, is approximately 250 to 300 crores. There's a lot of traction in the private sector wagon space as well, where we are having a very good position, leadership position. And we are now producing, or we have been able to get to about 700 plus wagons, and our target is to get to 1,000 wagons per month by the end of this financial year.
Okay, that was a big mover in trade today. Moving on to the third headline now. Oberoi Realty, Vascon Engineering, Suntec Realty and IRCTC traded in green today. Oberoi Realty launched its first residential project in Thane, while an order-to-build hospital boosts Vascon Engineering. IRCTC gained after getting a nod for long-term catering contract from Ministry of Railway. Vivek Iyer is joining us with the details on all these stocks. Vivek, so many movers in the broader markets.
So one index that's doing very well, and even within that, we've been highlighting this for quite some time. It's the realty pack. Today, a lot of real estate stocks, continue their march upwards, and a lot of them even now are, trending near the day's highest point. So the first stock on our radar, Oberoi Realty, the company has launched a luxury residential real estate project in Thane. Now, this particular project spread across 18 acres, across 5 industrial towers, and along with that, when you're talking about the apartment size, almost 1,090 square feet, each apartment priced at 1.87 crore. So significant, potential seen over there, and on the back of that, Oberoi Realty is in focus. The other stock on our radar is Suntec Realty. Motilal Oswal today has come out with an initiating coverage report on this particular stock. They have a buy stance. The target price is 640 rupees. What they say is that the company is likely to post a revenue CAGR of almost 25% between FY23 to FY26. The company is gearing up for 2-3 new significant project launches, and they're also saying the company enjoys a strong balance sheet, robust cash flows, and on the back of that, the growth potential here is quite immense. The other stock on our radar, falls in the real estate infra construction space once more is Vascon Engineering. The company has received a letter of intent from Pimpri-Chinchwad Municipal Corporation. This is to build a hospital, and the size of this particular order is quite significant, 350 crore above. IRCTC too is in focus. Some positive news flow coming in there. Ministry of Railways has permitted the company to go in for long-term tenders as far as catering on trains is concerned. This particular tender will be a 5+2 model, so 5 years, and then other 2 years additional is possible. So this now gives the company some amount of revenue visibility, and also it allows smooth implementation for providing passenger services on trains. So IRCTC too is buzzing in today's trading session.
Okay, that is a bunch of stocks that were on our radar today. Moving on now, Tata Steel gained over 1.5% on the back of a positive note coming in from Jefferies. The brokerage firm has retained a buy rating on the stock. They believe that Tata Steel's margins will expand in the third quarter, but higher coking coal prices may lead to some risk in the fourth quarter. Nigel D'Souza is standing by with the details. Nigel.
Well, yes, Jefferies, from the metals and mining space, they prefer Coal India. But this note that they've written early this morning is on Tata Steel. So let's focus on that. They have a buy rating, target price of around 145 rupees per share. But they have skimmed down their EPS as well as their EBITDA estimates for the coming years. Now, they go on to add that valuation-wise, well, the stock is trading at around 6.6 times EV upon EBITDA, which is more or less in line with what it's traded with regard to the long-term averages. And let's break this up into two parts. One is on the Chinese setup, and the second factor is on the Tata Steel company itself. So now in terms of the Asian steel spreads, they're saying that it's hit the lowest levels we've seen in the last 10 years or so. And only 16% of the steel mills were making money at these low prices as of the data that they got in October. There are two reasons for this narrowing down of spreads. One is that steel prices have corrected from around $670 per ton to around $540 per ton. The second point is that the coking coal cost have gone up by 40%, from May till November. So both those two factors put together have compressed steel spreads. But now they believe that there is an upside risk to steel spreads at these prices. So that's the Asian part of the Chinese part of it. Moving to Tata Steel, what are they working with? Well, they're saying the India business, the margins will improve in quarter 3 in comparison to quarter 2. But they're also saying that quarter 4, well, they're still a little bit skeptical out there because the margins may not improve out there. It could only improve if they manage to push through price increases because coking coal costs have gone up a fair bit. So that's about the India business. They're expecting some kind of improvement for the second half of the year if you compare it with the EBITDA that they've reported for the second quarter. On the Europe business, they say yes, things are under pressure out there, but they expect the losses to narrow out from quarter 4 onwards because the Netherlands blast furnace realigning, that will be done. So they're hoping that the losses do contract out there. Put all this together, Jefferies, they have a buy rating on Tata Steel, though they've skimmed down on the EPS and EBITDA estimates. Back to you.
Okay, all right, Nigel, thank you so much. So that's Tata Steel that is in focus. In more stock-specific news, KPIT Tech tumbled 7.5% after Kotak Institutional Equities put out a sell rating on the stock, and the stock had rallied 36% over the past month. Reema Tendulkar is here with the details. Reema, what is Kotak Institutional Equities' view on the stock?
Thanks so much for that. So Kotak has titled its report as Perplexing Exuberance because the stock is up 36% in the last 1 year without a big incremental positive change in the company's fundamentals. 2, the valuations of the company are high. Valuations are at 59 times FY25 PE. The current market price and the valuations imply that the strong growth is going to continue for the next 10 years. So the street is currently pricing in a 20% top line growth for the next 10 years with margins improving to 20%. Kotak agrees that given KPIT's strong capabilities, it deserves a premium valuation. But they disagree on the extent, the magnitude of premium valuations that the street has assigned. They also highlight one more risk. It's not a big risk, but they're just putting it on the table. Now, PACCAR is one of KPIT's key clients, and they're saying that PACCAR has announced plans to scale up operations at their India Technical Center, which is based in Pune, and therefore there is a possibility of an insourcing risk. They reduce their dependence on KPIT and decide to do the R&D at their own technical center, sort of like a captive center. Though as of now, PACCAR's scale in India in terms of its captive center is fairly limited. Back to you.
Rima, thank you so much. So that's about KPIT Tech. A big fall in the stock price is what we saw today. It's time to shift focus to the specialty chemical sector. Elara Capital has a very bullish view on the sector. They are talking about a recovery. However, Nirmal Bang has taken the opposite stance. So let's talk about what they really are talking and saying about the specialty chemical space. Let's start with Elara, which is quite bullish. Now remember, Q1 and Q2 have been quite weak for the chemicals industry. But now Elara says they are concluding that destocking, which was the main reason of weakness and pricing pressure was the reason, would be over by Q3 and they would see a recovery from Q4 of FY24. And they're upgrading their stance to positive from the cautious stance that they had earlier. They're expecting a slight recovery in Q4 and full recovery coming in from FY25 itself. Naveen Fluorine and Vinati Organics would be the two stocks which would lead to recovery or which would be the growth drivers in the sector itself. Now, Global Chemicals' 4-year long-term valuation cycle is indicating that second half of FY24, that should be the bottom, and calendar year 2023 should be the fourth year of the bottom of the current 4-year global chemical cycle that the industry is in currently. Their chemicals coverage universe target price could increase by 23 to 44% with the recovery that would come by as well. Nirmal Bang, on the other hand, says they conclude that times are tough in the near term. They are talking about only select players doing well in the pocket and also they will only thrive in the longer term as well. There's destocking in agrochemicals which had started in first quarter of FY24, unlike the other end user industries like dyes, pigments, which continued to see a downfall for the last couple of quarters. Generic agrochemicals and pharmaceuticals, this space might witness destocking for the next 1 to 2 quarters according to Nirmal Bang. They're not seeing recovery in FY24 at all. Global chemical demand continues to be very weak. However, India demand remained resilient and performance of Indian exposure or in companies with domestic exposure was relatively better, and that is what they think would continue to be the theme. But this is just a bull versus bear idea that's come by or the view that's come by from two different brokerages. So just thought that we would put that on board because the chemical sector continues to be on our radar as well. Moving on now, Cochin Shipyard gained on the back of a positive brokerage note. Kotak Institutional Equities increased the fair value by 3% and they've spoken about what's working for the company as well. Upasana Bhatt is here with the details, though the stock came off from the highs towards the end of the day.
Well, Kotak has raised its FY24 to 26 estimates by 2 to 9% and increased fair value to 1,060 rupees. The company has recently hosted its H1 FY24 earnings call and highlighted some of the important things. While Cochin Shipyard says that the repeat indigenous aircraft carrier order is close to being considered by Defence Acquisition Council, and Kotak believes that the past record of the company places it in a pole position and remains the key catalyst for the stock. H1 FY24, the EBITDA margins of the company came in at 19.8%, which was significantly ahead of the guided range, that is, between 14 to 15%. The brokerage believes that the margin improvement was mainly on the back of better product mix and shall continue going forward. Mind you that the company has also raised its PAT margin guidance to 16 to 17%, and the company at the end of Q2 FY24 has indicated a healthy prospect pipeline of 13,000 crores from defence and non-defence segment. While the brokerage believes that the healthy prospect pipeline from defence, ship repair and European markets provides a decent medium-term outlook.
Upasana, thank you so much for that. It's time to slip into a break. When we come back, we'll talk about the other headlines that we are tracking for you. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Well, let's talk about the rest of the headlines now. The fourth headline, onto the commodity space. Oil prices eased, reversing yesterday's rally. This as investors turned cautious over weaker demand amid a slowing global economy and the prospects of deepening supply cuts by OPEC. Peter Maguire, CEO at Exim Australia, said he won't be surprised to see a couple more % gains for the rest of the week. He also added that the global demand is weak across most of the sectors. Listen in.
Well, I think a couple of things. First off, we've got that big meeting coming Sunday in OPEC land in Vienna, Sunday, Monday, and I'm pretty sure that the overall theme is going to be one of positive news coming out from their point of view. They want to see higher prices, as we know, and it seems to be very much range-bound at the moment. That US dollar's come under some significant pressure to the downside, and crude's bounced up. And it's bounced up fairly strongly, so I wouldn't be surprised to see it gain a couple more % over for the rest of the week and leading into Sunday. I've got to see they're conscious as far as export numbers. They look as, PMIs, they look at industrial demand, they look at Germany, they look at Eurozone, China. So I don't necessarily think you're going to see too much of a additional supply cut. I just want to see where their theme is and what they more or less where their line in the sand is, because they're conscious as far as global demand is weak across most sectors, and they really appreciate that, but still they want to see higher prices. So I think they're caught between a rock and a hard place at the moment, and I'm not necessarily think that we're going to see additional cuts.
All right, that is the word coming on crude oil prices and the outlook there. But moving on to the fifth headline now, the IPO lane will be busy in November with 6 companies, including Tata Technologies and Indian Renewable Energy Development Agency, tapping the primary market as well. Yash Jain brings us the details. Yash, which companies are riding this IPO wave?
Well, as you rightly pointed out, Sonal, not 1, not 2, but about 6 companies would be coming out with their IPO this week itself. As far as these, IPOs are concerned and the list is concerned, Tata Tech and IREDA would be the largest amongst these 6 companies where subscription would open up as far as the IPOs are concerned. Let's speak about the first one, which opened today itself, IREDA. It opened today, will close on November 23rd. The price band as far as the IPO is concerned is between 30 to 32 rupees per share. The company plans to raise about 2150 crore through its IPO, about 1290 crore comes into the company, and the government also, through selling it some stake, raises about 860 crore rupees. As far as the update as on 4:45 is concerned on IREDA, the total subscription stands at 2 times, QIB 1.5 times, HNI 2.6 times, retail 2 times, employee portion about 2 times. Tata Tech, the first company from the Tata Group to come out with its IPO in 19 years, opens tomorrow, closes on 24th of November. The price band of 475 to 500 rupees per share. The company is raising about 3,000 crore as far as the IPO is concerned. Gandhar Oil Refinery India IPO opens tomorrow again, closes on November 24th. The price band of 160 to 169 a share. The company plans to raise nearly about 500 crore as far as this IPO is concerned. The next one here is Fedbank Financial Services IPO. Again, opens tomorrow, closes on November 24th. The price band of 133 to 140 rupees per share. A total of 1,092 crore is what the company plans to raise as far as this issue is concerned. Finally, Flair Writing Industries, the IPO again opens tomorrow, closes on November 24th. The price band is between 288 to 304 rupees a share. The company plans to raise 593 crore. Through this IPO, 292 crore comes into the company out of the total funds. Finally, Rocking Deal Circular Economy IPO. The company specializes in bulk trading of surplus inventory, open box items, re-commerce products. The IPO opens tomorrow, closes on November 24th. The price band for this issue is set between 136 to 140 rupees a share, and the company plans to raise a small amount of about 21 crore as far as this IPO is concerned. A complete fresh issue of the funds coming into the company.
Such a long list of IPOs expected this week itself and in the month of November. Thank you, Yash, for bringing us up to speed with that, the IPO market that is. And speaking of IPOs, Pradeep Kumar Das, Chairman and Managing Director of IREDA, told CNBC-TV18 that the company's net interest margin trends near 3.5% to 4%. Take a look at what his guidance is going forward.
The NIM has come down. The reason is, during COVID period, we wanted to support the developers by reducing the interest rates fairly so that the sector could sustain. And today, we are quite comfortable. And our NIM has already gone incremental. From July onwards, we have enhanced the incremental interest rates. And that additional NIM incremental will be reflected soon in our next quarter result. See, generally we'll prefer 3.5 to 4, not much, because renewable sector in particular, if when you are having commissioned assets are de-risked, so your NIM has to go down.
Okay, that is all about the IPO markets. But with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.